US dollar index surges, key drivers and future outlook. Warning sign for global currencies. US dollar surges to new heights. Are you prepared for the potential fallout as the US dollar index, DXY, gains unprecedented momentum, leaving other major currencies in its wake? The greenback's recent surge, fueled by robust economic data and hawkish interest rate expectations, has set the stage for a potentially seismic shift in global Forex markets. The perfect storm. Economic data, technical indicators, and interest rate expectations align. On Friday, July 25, 2025, the US dollar index, DXY, closed with notable gains, up 0.28% at 105.02, marking one of its strongest daily performances this month. This remarkable upswing was driven by a potent combination of stronger than expected US economic data. Durable goods hoarders rose 1.3% in June, surpassing economists' expectations of a 0.6% increase. Core capital goods shipments also saw a significant boost, highlighting continued business investment and economic resilience. Technical indicators confirming the US dollar's upward trajectory. The DXY broke above its 50-day moving average, 104.70, and remains above the 200-day moving average, 103.90, signaling accelerating strength. The relative strength index, RSI, hovers around 62, indicating room for further gains without an immediate pullback. A hawkish shift in Federal Reserve policy outlook. Market participants now anticipate the Fed will maintain higher interest rates for longer, given the economic strength. This stance diverges from more dovish central banks abroad, particularly the European Central Bank, ECB, and the Bank of Japan. But here's where it gets controversial. Will the Federal Reserve's hawkish stance ultimately lead to a global economic slowdown, or will the US dollar's strength be the catalyst for a new era of economic growth? Safe haven demand, the US dollar's ace in the hole. Geopolitical tensions, mixed corporate earnings reports, and concerns about global growth have amplified risk aversion, driving investors to seek safety in the world's most liquid currency. The US dollar's liquidity, reliability, and yield advantage make it the top choice during times of uncertainty. Global currency performance recap, the US dollar's broad-based dominance. Friday's trading session saw the US dollar firm against all major components of the DXY basket, with notable declines in ERUSD down 0.34%, GBPUSD down 0.21%, AUDUSD down 0.31%, contrasting with a surge in USD/JPY up 0.45%. What comes next? Key developments to watch. 1. Next week's FOMC meeting. Will the Federal Reserve reaffirm its hawkish stance, propelling the US dollar index higher? 2. Q2 US GDP report. A stronger than expected figure could further support the dollar's bullish case. 3. Global central bank commentary. Shifts in tone from the ECB, BOJ, or Bank of England may impact cross-currency flows and alter dollar dynamics. 4. Geopolitical events. The US dollar's safe haven status will keep it sensitive to developments in global hotspots. Final thoughts. The US dollar's momentum remains unstoppable for now. As long as the US economy outperforms its peers and the Fed maintains a cautious stance on interest rate reductions, the US dollar is likely to remain the dominant currency in the global arena. But we want to hear from you. Do you think the US dollar's strength will ultimately lead to a global economic slowdown? Or will it be the catalyst for a new era of growth? Share your thoughts in the comments below. Stay ahead of the curve with NestTL.news, your trusted source for the latest news and trends shaping the world's most important currency. Dollar drops as Trump calls for Fed rate cuts amid trade deadline pressure. The US dollar, once a symbol of global stability, now teeters on the edge of its most dramatic reversal this year as political and economic forces collide. But here's where it gets controversial. President Donald Trump's relentless push for aggressive interest rate cuts could be the spark that ignites a seismic shift in currency markets. With trade negotiations hanging in the balance and the Federal Reserve caught in a policy tug-of-war, the greenback's recent performance tells a story of mounting pressure. Let's unpack what's happening and why this matters for investors, businesses, and everyday consumers. The dollar has stumbled through July with its worst weekly performance since the month began, shedding roughly 0.7% of its value against a diversified basket of currencies since Monday. This decline threatens to erase a 2-week winning streak and adds to a brutal 8.5% annual slide. Analysts trace much of this weakness to Trump's escalating rhetoric, both his aggressive trade policies and his public clashes with Fed Chair Jerome Powell. Imagine this scenario: a president openly criticizing central bankers for not aligning with his economic vision, while simultaneously threatening to disrupt global trade agreements. The resulting uncertainty is sending ripples through financial markets. And this is the part most people miss. The dollar struggles aren't just about rates or tariffs. They reflect a deeper tension between political ambition and economic reality. Trump's calls for rate cuts aim to stimulate growth, but lower rates typically weaken a currency by reducing its appeal to foreign investors. At the same time, his trade wars have triggered retaliatory tariffs and disrupted supply chains, further eroding confidence in the dollar's long-term strength. Here's the rub. While Trump argues that aggressive monetary easing could fuel a booming economy, critics warn this approach risks inflation and undermines the Fed's independence. Should the president succeed in pressuring the Fed, the consequences could be far-reaching. Think higher borrowing costs for consumers, volatility in emerging markets, and a potential reshaping of global financial power dynamics. So, where do we go from here? The next few weeks will be critical as the Fed navigates its dual mandate of price stability and maximum employment. Will policymakers resist political pressure and stick to data-driven decisions? Or will they yield to the demands of a president with immense rhetorical power? And what does this mean for the dollar's future as the world's reserve currency? We want to hear from you. Do you believe Trump's strategy could stabilize the dollar in the long run? Or is it a recipe for economic instability? Share your thoughts in the comments below. This is more than just a debate about numbers. It's a test of how democracy and markets intersect in the modern era. U.S. dollar gains as markets await key economic data. Forex update, July 25th. In today's fast-paced financial world, the U.S. dollar has managed to break free from its recent slump, capturing the attention of traders and analysts alike. But here's where it gets interesting. As markets stabilize ahead of key economic releases, there's a palpable sense of anticipation in the air. What lies ahead for the greenback? Let's dive into the details and uncover what this means for investors. On Thursday, July 24th, the U.S. dollar index experienced a notable uptick, climbing by over 0.3%, effectively halting a 4-day losing streak. Early Friday saw a quieter tone across global financial markets as participants adopted a wait-and-see approach before the release of crucial data later that day. Among the most anticipated reports was June's durable goods orders, a figure likely to sway sentiment among traders. To better understand how the U.S. dollar performed this week, let's take a closer look at its movements against major currencies. A detailed comparison reveals that the euro inflicted the most significant damage on the USD, with the latter losing nearly 1% of its value relative to the single currency. Meanwhile, other pairings such as USD JPY and USD CAD also reflected varying degrees of volatility throughout the week. A helpful way to visualize these shifts is through a heat map showing percentage changes between currencies. For instance, if you select the US dollar as the base currency and pair it with the Japanese yen as the equivalent currency, the resulting figure will reveal the performance of USD JPY. This type of analysis allows traders to gauge momentum and identify trends quickly. Shifting focus to Europe, the European Central Bank, ECB, maintained its benchmark interest rates unchanged following its latest policy meeting. Speaking afterward, ECB President Christine Lagarde acknowledged ongoing risks to economic growth that emphasize a cautious wait-and-see stance due to lingering uncertainties surrounding EU-US trade dynamics. As a result, Euro-USD hovered near 1.1750 early Friday, awaiting further direction from Germany's IFO sentiment survey. Meanwhile, across the Atlantic, the U.S. labor market showed resilience, with initial jobless claims dropping to 217,000, better than the expected 227,000. Additionally, private sector activity surged in early July, supported by strong readings in the S&P Global Composite PMI. These positive indicators have bolstered confidence in the American economy, even as President Donald Trump continues advocating for lower interest rates during visits to the Federal Reserve headquarters. And here's something worth pondering. While Trump pushes for accommodative monetary policies, Treasury Secretary Scott Bessent highlighted progress in U.S.-China trade negotiations during an interview. According to reports, new talks are set to begin soon, aiming to enhance U.S. access to Chinese markets. Such developments could influence the trajectory of the USD, which remains range-bound around 97.50 in European trading sessions. Over in the UK, retail sales rebounded slightly in June, rising by 0.9%. However, this increase fell short of expectations, weighing on GBP USD, which struggled below 1.3500. Similarly, Japan's Tokyo CPI indicated slowing inflationary pressures, causing USD JPY to retreat after earlier gains. Turning our attention to commodities, gold extended its decline after Wednesday's sharp drop, shedding over 0.5% on Thursday. XAU USD now faces renewed bearish pressure, edging closer to $3,550 early Friday. Now, let's address tariffs, a topic sparking heated debates globally. Essentially, tariffs are taxes imposed on imported goods to shield domestic industries from foreign competition. While proponents argue they protect local businesses, critics warn they may lead to higher consumer prices and retaliatory measures. With the 2024 presidential election looming, Donald Trump has signaled his intent to leverage tariffs strategically, targeting nations like Mexico, China, and Canada. Could this approach reshape global trade relations? That's a question worth exploring further. Before we wrap up, remember that investing always carries inherent risks. Whether you're considering Forex, stocks, or commodities, thorough research is essential. And here's my final thought provoker. Do we believe tariffs are a necessary evil or a detrimental policy tool? Share your thoughts in the comments.